In a world where technology is rewriting the rules at lightning speed, disruption is not coming, it's already here. The question is, are you ready? Welcome to Tech Week, your insider's guide to the digital revolution, transforming business, policy, and innovation in the Philippines and beyond. I'm your host, Jack Madrid, and we are cutting through the noise to bring you the real stories shaping our future. We're talking to the risk takers, the game changers, and the architects of tomorrow, unfiltered and straight from the source. This is not just tech news, this is the roadmap to what's next. This is Tech Week, and this is how we decode the future. Welcome to Tech Week, where we dive deep into the intersection of technology, business, and the economy. In this episode, we're taking a closer look at the state of the Philippine economy and the stock market, how technology is shaping its future. From the impact of artificial intelligence on the IT-BPM sector, to the role of fintech and digital banking and financial stability, to how geopolitical tensions are shifting global supply chains, we will explore the key trends influencing investor confidence and business growth in 2025. We will also discuss market liquidity, foreign direct investment, the high cost of energy, and the importance of smart infrastructure in making the Philippines more competitive in the digital age. And to help break it all down, I am joined this morning by Mitzi de Dios, the country head of CLSA Philippines. She is one of the country's leading voices in stock market analysis and investment strategy. Mitzi, welcome to Tech Week.
Thank you, Jack. It's a pleasure to be here.
Let us dive right in. Mitzi, you've been in the stock market for quite some time now. What is your present assessment of the current state of our economy, and what are some of the risks and growth drivers that you see?
Okay, to put it simply, the economy is in a good state, right? 2024 GDP at 5.6, and we have tracked the growth over the last 15 years or so. And the Philippines GDP on a CAGR basis grew at around 5% from 2010 till 2023, 2024. That's actually one of the highest in terms of growth rate in the Southeast Asian nations, actually second only to Vietnam. Now, the main growth drivers, the economy is really a consumption-driven economy. And so the drivers continue to remain on consumption. Of course, there's also investment and government spending as well, right? Now, what is critical and what has driven the growth over the past 2 decades would be the service industry. So we call it the trifecta in services. So the first, as everyone knows, is the BPO segment, revenues of 36 billion US, employing close to 2 million people already. And most of, if not all, are based in the Philippines.
That's right.
Which is a positive. Then, of course, you have the overseas Filipino workers, more than 2 million of them outside of the Philippines working, and they send remittances of around $35 billion. Now that has grown at around 3 to 4% over the last 15 years in dollar terms, but 7% peso terms. Okay, so these two have been constant, right? And for the BPOs, they are based here, so they spend here. Their wages are higher than the normal wages. It's a tough job, right? Because a lot of them still work overnight, so they get premium wages because of that. But a lot of them are young as well, And so they do spend, they go out and spend a lot. The OFW, they're also spread out, right? A lot of them are based in Luzon, Visayas, Mindanao. And so the main purpose of working overseas is obviously to provide better better life for their families. So they send money back. And that goes to first buy a house, then education of the kids as well, right? And eventually buy discretionary items. So they're spending, they're fueling the economy.
You mentioned the trifecta.
Okay.
What is that third pillar?
The third is the tourism sector, right? Which also keeps jobs on the ground, right? Now, the country with over 7,000 islands is not maximizing yet, I must say, its potential, right? If you compare it to ASEAN neighbors, the Philippines received around or welcomed 5.9 million tourists last year, okay? That compares to Thailand's 28 million plus, Malaysia's 20 million plus, right? So it's far from the ASEAN neighbors, but that is changing, and we're very, very optimistic of this sector. They employ more people than BPOs, more than 6 million. The GVA, or gross value add, of the sector is around 10 to 12% of GDP, right? So that's around close to 50 billion US. And so if what the government has done recently over the last 2 years is definitely going to see more upside in visitor arrivals. So it's really, really good to see the growth prospect. Of course, the basic need to have more tourists come to the Philippines is to enable them to actually be able to fly in seamlessly. So infrastructure development is very, very important. And what this government has focused on is to privatize airports, right? That's your gateway, right? Anyone who comes to the Philippines, the first thing they will see would be the airports, right? And ideally, you have efficient airports, because like you and me, when we go on holidays, right, we just usually want one hop.
Yes.
Once you land there, you want to land and get out of the airport within a few minutes, ideally, right? And so it doesn't help if it takes a bit of time to get out, if there are no direct flights, right? And so the first big airport privatization has been the rehab of the Ninoy Aquino Airport. This was auctioned off to the private sector last December. A few months into September of last year, and was awarded to the winning bid last December. Okay, and you know the current NAIA capacity is 32 million, but it already handled more than 50 million pre-COVID in 2018, 2019. Right.
You know, I think you raise a very good point, Mitzi, the importance of infrastructure.
Yes.
Especially airports.
Yes.
After all, that's the first impression of arrivals. I want to go back to tourism as that third pillar, but,
yes.
but I do want to go back to the equity markets.
Yes.
Right? The Philippine market is currently down, say, about 4% so far this year. Now, what are some of these factors influencing investor confidence, and are there specific concerns that are affecting the sentiment of institutional buyers?
Right. Okay, thanks for that question. We at CLSA Philippines in particular, we have been the major cheerleader of the Philippines, especially in the equity market. Our client base is global, so we do get to go and meet with investors, global fund managers who manage long-term money, okay? And they are quite optimistic of the prospect of the country. The country offers very young workers. The demographic profile is one of the best as well in Asia. You have 115 million population with the median age of 24, right? So there is a lot to tap on, talent to tap on, not just domestically, but overseas, right? And education has improved. And so a lot of them are finishing with college degrees. Around 77 million of the population have reached or have obtained college degrees. So it's very, very important for investors to see that compared to aging population, right? So the pyramid of the Philippines is actually almost a perfect pyramid in terms of the age group, okay? So that's one. Of course, and that's very, very important, right? Of course, the industries or sectors that remain large are the consumer, property, banks, telecoms, right? And growth is important for investors, and they do see these sectors growing over the next few decades, and that also appeals to them. In terms of the governance, there's definitely been a lot of confidence on the current government and their ability to actually work on key infrastructure projects. And so that is another positive for investors overall. Now, what is stopping some of them from investing would be the high interest rate environment. Okay, so the option right now is whether to go to the equity market or be in the fixed income market, right? And given the rise in interest rates over the last 2 to 3 years, most pension fund managers are actually opting to put more money in fixed income because of the guaranteed returns. In the meantime, the view is obviously given the higher interest rates, then the returns of investments by companies may take a bit of a hit. But having said that, most, or if not all companies under our coverage have very strong balance sheets, can definitely weather through the high interest rate environments and even prosper from it. You'd be surprised, more than 10 or more than a dozen companies last year recorded all-time high profits.
Wow.
Yes, and that's been happening over the last 2 to 3 years. And we do expect that to continue over the next few years. That's why they've also been paying out cash dividends, right? So cash dividends have been increasing. So your dividend yield has also been increasing.
Mitzi, I often hear that market liquidity is an issue.
So,
can you make a comment about
yes.
that?
So given that the recent market correction over the course of last year has seen a sell-off in various companies, right? And companies seeing growth in their cash flows, right? A lot of them have been buying back their stock, right? So that's already taking out a bit of liquidity, right? There also hasn't been a lot of new IPOs, but I think that is going to change soon. And so a lot of investors, before they even invest in a particular company, the minimum liquidity is $5 million of turnover every day. And only a handful of companies actually hit that minimum, right? So for them, if it's going to take them a few days or a week to accumulate a particular company, it's not appealing to them. So the liquidity is very, very important. And right now, the country is one of the least in terms of average daily turnover. But we see that changing. We need to see more listings. That should help. And the government has also helped push for lower friction costs, right?
Right.
So the sales tax, if you're going to sell a stock, will be cut from 60 basis points to 10 basis points. So that's 50 bips savings. So
and
hopefully
that will
encourage
drive some additional volume.
Yes, encourage more investment by both retail and domestic institutions as well as from overseas. Yeah.
We're going to take a short break. Tech Week, we'll be right back. Please stay with us. Welcome back to Tech Week. We are still with Mitzi de Dios, the country head of CLSA Philippines. Mitzi, let's go back to tourism growth and what we were discussing earlier, with infrastructure remaining a big challenge. Now, can you dwell more on how important both physical and digital infrastructure is in boosting tourist arrivals and maybe even additional investors to the IT-BPM industry?
Okay. On tourism, right, as I said, airports are the gateway into the country, right? If you're able to ensure that the transit in and out is seamless, then you'll definitely attract more visitors, right? Now, how does this work? Obviously, you have to have a more efficient airport, right? That's why this recent privatization of NAIA will expand the capacity from 32 to 60 plus million over the next few years. And that should allow for more direct flight connections. We're already seeing that happen. A few international airlines, United Air, Air Canada, and Qantas,
right,
are adding more direct flights into the Philippines, into NAIA, right? And that should enable for more tourists to take a look at the Philippines because it's just a hop away, okay? Now, if you go through other airports in the region, the ones that have been upgraded or the latest airports, you can see passing through them how easy it is, right? The e-gates, that's a big help, right? It cuts through the line. So that's how technology is now being applied. When you board airlines, the airplanes in other airports, it's now facial recognition, right? And I'm pretty sure the current concessionaire of NAIA will be implementing these changes over time. And so that definitely will make the Philippines like a destination that tourists would want to go through because it's just so easy to get into the country.
And hopefully we see some similar improvements in domestic airports in Tier 2 and Tier 3
Yes.
cities,
So
right?
aside from NAIA, Bohol Airport was also privatized recently. Okay. Now, there are a few in the pipeline, like Iloilo, Davao, Palawan, and a few others, right? And these are where, it's in provinces and regions that are tourist-friendly. And so definitely over the next 2 to 3 years, once privatized, they will improve, they will upgrade, and allow for more direct connections from overseas as well. So you also free up, right, the capacity in NAIA, right? So, yeah.
Let's move on to another issue that I hear often, Mitzi, which is the high cost of power and electricity.
Yes.
It's been a major concern both for businesses and a deterrent for investors. Now, how do you think this is affecting FDI, and what do you think needs to be done to make the Philippines more competitive here?
Over the past decade, what has helped is the renewable energy transition, wherein it is now not as expensive to build solar plants because the cost of building solar plants have come down as raw materials needed have actually been flooding the market globally, right? And so that allows for power gencos to offer cheaper power, right? And so, but it will take a bit of time, right? Because you cannot just expect the country to immediately transition from thermal, which is coal, diesel, to renewable energy like solar over a few years. It takes time to build, right? But the country is headed towards the right direction, right? The Energy Department has mandated that, or their target is to try to get a third of total output to be renewable by in 10 years' time, right? Is that achievable? If the government really pushes out more projects, they're offering or auctioning off a lot of these power contracts, right? And there are many players, not just domestic, but also foreign players getting into the renewable energy transition.
And hopefully we get to see more traction.
Definitely.
Right,
So that helps in trying to attract more FDIs. Manufacturing used to be big in the Philippines a few decades ago, but the country has shifted to more service-oriented, right? But if power costs come down, then the country will be more competitive on the manufacturing side, especially with the population and the demographic profile, right? But it will take time. One particular growth area, right, that will require a lot of power is the mining sector. We're quite optimistic about the prospects, and this current government is really coming out with a lot of new laws or updating existing laws to be more mining friendly. Yeah.
Okay. Before we wrap up our conversation, Mitzi, I can't help but ask you a rather broad question. Given the current geopolitical tensions,
yes,
the current political landscape, which includes developments related to, the former administration, do you see any impact on the market as far as investor confidence is?
I think, believe it or not, the way we view politics right now in the Philippines, it's one of the more stable countries.
Wow, really?
In terms, yes. With the entry of with the Marcos government almost hitting its mid-cycle, right? Of course, there's midterm elections, but it's not national. And what helps actually is the stability of the current government and also the policies it has implemented. And so far, it's been investor-friendly. So a lot of our investors do recognize that and are actually quite optimistic of the prospects. Yes.
So that sounds pretty upbeat,
Yes.
Relatively speaking, compared to the other markets.
Yes, especially over the longer term, right?
Well, that will be a wrap for this week's Tech Week. A huge thank you to Mitzi de Dios, the country head of CLSA Philippines, for sharing your valuable insights with us. The future is being built right now, and conversations like these help us decode the future and navigate what's next. Join us again next week as we dive into another game-changing story shaping technology, business, and innovation. Until then, stay curious, stay bold, stay ahead. I am Jack Madrid. You can catch BNC on Free TV Channel 31 and on Signal Channel 24. Thank you for watching BNC, the Bilyonaryo News Channel, always on top.